Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D-Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll also get you expert views to find out what should be your investment strategy in the equity markets right now. But first up, a quick check on how the markets are doing at this point in time. Well, it is a little subdued at this point when you talk about the benchmark indices, the Sensex and the Nifty, about 185 points of a cut for the Sensex right now. It's hovering anywhere between 62,601 around those levels. The Nifty is also slipped below that 18,600 mark that it has achieved yesterday. So 50 points of a decline for that one. The broader markets trading mixed, with the mid caps actually seeing some cuts of about 0.4% odd, with the small caps, however, trading with a positive bias in today's trade. Now, when we talk about the other sectors also in today's trading action, you will be able to see a whole host of other sectors that are in focus in today's trade. Let's look at the Nifty Bank, for example. That's up by 0.4%. But what's important to find out is whether the constituents are also supporting the indices. Like financial services are up by 0.4%. But the PSU banks continuing with their downward run for the second day in a row in this week. Now, apart from this, you're also seeing subdued action coming in on the FMCG pack, on the IT pack. That's creating some pressure for the markets. Apart from PSUs, the healthcare index is slightly subdued as well. But it's the auto stocks that is definitely outperforming the markets. Second day in a row, and we've been seeing smart gains coming in on that index, about 1.2% of an uptick for that one in today's trade. Many of the stocks are in fact trading at 52-week highs and all-time high levels from the Nifty Auto Index. 0.8% of an uptick for this index right now as we speak. Among the top gainers in today's trade, you do have a few stocks coming in from this basket again. On the Nifty pack, you do have, Ultratech Cement, Axis Bank, those kind of stocks that are definitely doing well. Grasim is doing well. So some of those capital good majors and cement makers, they are making some headlines today. Tata Motors continues with its upward run, 1.3% uptick for this one as well. Divis Laboratories has come back in flavor today, 3,500 odd at 1.2% uptick. Bajaj Finserv, M&M, these are the gainers that continue their upward run from yesterday as well. Apart from that, on the losers side, when you talk about the Nifty laggards, some pressure coming in on the IT pack for sure, because this is the index that's been under pressure because of the global news that's been coming in. Tech Mahindra, Infosys, HCL Tech, all top three losers on the Nifty pack. You are also seeing some concerns coming in on Wipro and TCS, 1.2, 1.8% downtick for this one. And from the oil and gas upstream major, ONGC also slightly down in trade. But let's welcome our guests on the show. With me on the show, I'm joined by Mr. S Bhatnagar, market analyst, and also joining in is Avinash Gorakshakar, director research for Profitmart Securities. Good afternoon and welcome to both of you, and thank you so much for taking the time out for this discussion. Let me come to you first to understand broadly what is your sense about the Indian markets right now. We've been looking at several sectoral indices making those record levels, starting from Nifty Bank, Nifty Auto, FMCG, all of those, and investors have been clearly waiting for the Nifty to now reach that level as well. But what's the sense? Are we going to see that level anytime soon, or are we going to face some hurdles? Like today is a down day, a bit of a down day, but it's going to be a speed breaker or a bit of a more correction. How do you see the markets?
Hello, Sakshi and Avinash. It's great to be back on your screen, and thank you for inviting me over. Basically, Sakshi, we are at the beginning of the RBI's MPC meeting that starts today, and it's a 3-day affair, which on June 8th will get over. We'll also see the weekly expiry of Nifty and Bank Nifty contracts on that particular day. What is interesting, however, is that if you see the previous meeting, which happened on April 6th, from then on and now, which is a gap of almost 2 months, you've seen a fantastic rally that's happened in the markets. And that's mainly because there was a pause that the RBI Governor Shaktikanta Das said. Now, 99% of the market expects that pause to continue. And between April 6th and June 6th, in this 2-month period, we've seen a very sharp rally on interest rate sensitive stocks and sectors like realty, real estate, for instance. The BSC real estate index is up 25%. The Nifty Auto Index is at a record high. It's gained somewhere like 19%, 18% in the last 2 months. And Bank Nifty is up 7%. And of course, Nifty is also up 6%. So this kind of a rally might pause for a bit in the month of June because of the sharp rallies that we've seen in May and April. But the fact remains that given the FII flows, given how retail and mutual fund momentum is there, I'm hopeful to see a very good and strong high on the Nifty as well in the
Okay.
coming weeks, if not a month.
Okay, coming weeks, if not a month. Avinash, what's your take? How soon are we going to see the Nifty really touching those all-time high levels? And also, just like how, Shell really pointed out about the importance of the RBI policy this week, how do we see the markets in light of that?
Yeah, good afternoon, Sakshi, and good afternoon, Shell. See, my views also concur with what Shell said. I think the RBI policy is going to be a very important data point. In all probability, we are going to see a pause.
Hmm.
And following that, we have the US Fed policy also. So I think there also, hopefully, the markets are factoring in that there could be a rate pause here. And if that happens, then I think the markets would get significantly re-rated. And that's what's driving the markets till now. Today has been a profit booking day. But I think over the medium term, if possibly rate pause comes in, then we are going to see a lot of interest sensitive sectors like autos, auto components, real estate, capital goods again catching up. And
Yeah.
this will be across the frontline category and the mid cap category. So I think markets are definitely on a positive note. I think
Hmm.
this kind of correction was expected, and I think one should not be worried about these minor profit booking kind of points in the market.
Okay. Michelle, one is wondering what retail investors and participants should be doing at this point now. Should one go ahead, add more positions, try to catch the rally further, or do you think this is time to sort of sit back and consolidate your holdings, maybe even take some profits a bit?
Sakshi, I don't think so. We are in a position where we should be taking profits away. The best is yet to come. And
Okay.
while not commenting on how or what should be done on an intraday basis, I'm sure Avinash is a better person than me to take that call. But I would just like to say 2 or 3 points. I think we are sitting in perhaps the finest bull market that Indian retail investors are likely to see over the next 2 3 years. So the
Yeah.
best strategy would be to use this opportunity and any dip in the market to buy quality and superb quality. If you are not in tune with the market on a regular or a half an hour basis or a minute by basis, as Sakshi or Avinash are, I think the best strategy is to buy 3 or 4 different kinds of mutual funds and ensure that you keep on investing on a monthly basis via the systematic investment plan into those funds and not be, how should I say, shy away from the market. This is not a market where you stay away or book profit. You just remain invested and wait for the high tide or the better tide or better GDP numbers or better tax collections to help you make super normal profit. It's in the pipeline, and those people who are patient, who buy quality and hold on to quality, will make super normal money in the coming months and coming years. Sakshi.
Okay. Okay. Avinash, would you add on to that? I mean, like, just, a few days back, we saw Morgan Stanley saying that this is just the beginning of the party. Do you think the summer rally of 2023 has a long, long way to go? And could it be like what we saw in 2021 and 2022 as well?
Yeah, I think basically, see, the markets are attracting a lot of liquidity, both from the domestic SIP inflows as well as from the FI, fund inflows, and that is probably one of the reasons the market has seen a very strong buoyancy in the last, say, 3 4 months.
Hmm.
Technically, I would say that profit booking is a very individual kind of approach. If you've made a decent kind of upside, it's always wise to take some profits off the table. But
Yeah.
as I said, I think we should not book out completely, and I concur with the view what Shailesh said is that you need to invest your money in quality businesses both from the large cap as well as from the mid cap and the small cap categories. In fact, small cap and mid caps are now generating more alpha. I think probably this is a time when most people are entering this segment, so they need to be a little careful. But yes, overall I think the mood in the market is quite positive, and I would not be surprised that we could be headed for higher levels in the market provided earnings growth and overall the economy as a whole I think does better. So I think net I think it is a buy on decline market, so one should
Okay.
not exit in a hurry.
Okay. Shell, I wanted to understand, how do you look at the mid caps and the small cap space? Do you think it is time now that investors focus increasingly on this? Is this space likely to now outperform?
Sakshi, I am generally a blue chip guy,
Yeah.
and I prefer to remain invested in larger and bigger and well-defined and well-established companies.
Yeah.
However, uh, the BSC and the NSE small cap and the mid cap indices are poised for a record high. It
Okay.
takes great courage and a different set and mindset to mine and buy hold mid caps.
Hmm.
I'm primarily a blue chip holder, and it's paid off handsomely over so many years.
Yeah.
Uh, of course, mid caps and small caps should be about 30% of your overall portfolio, which is, maybe 15% in mid cap and 10% in small cap, and
Hmm.
5% in international markets, the 60% or 70% being blue chips.
Yeah.
This kind of a portfolio, if it's sort of rebalanced every year, would
Hmm.
give you better than market returns. So the best way to play mid caps and small caps is to pick up a very good quality fund which has a 10-15 year exposure in that sector, and
Okay.
just buy, hold, and put an SIP in that fund. Mid caps per se are very, very volatile.
Hmm.
Small caps even more volatile, but that
Hmm.
doesn't mean they shouldn't be a part of your portfolio. There are
Mm-hmm.
better ways to, maybe play them. And
Okay.
the best way is, of course, a good, strong mid cap and a small cap fund.
All right. Avinash, could you enlist for us which are the current sectors you're overweight and underweight on?
I think on the positive side, where we are overweight, I think clearly automotive sector remains our top bet. Auto components is the second one.
Yeah.
We are positive on capital goods. We are positive on real estate. So these three,
Hmm.
four sectors, we believe the traction continues to be positive, and we could see decent returns in the current financial year.
Right, you're absolutely correct over here. We've been seeing this auto space constantly be in focus, at least for the last 4 straight sessions. We've been seeing that this sector has been in spotlight. But what is the best way to approach it? Because, we've seen a variety or a difference in the kind of sales figures that have come about as well. Two-wheelers perhaps have led the space in that front. We've seen the passenger vehicles also following suit, but commercial vehicles are still laggard in that space. Do you think that's exactly the way how investors should be approaching it, or should one really pick up quality stocks from each of these segments, just like how Shell also pointed out?
I think a better way to play the automotive sector would be, to play the auto component guys, because
Hmm.
clearly, when the automotive sector does well, there are
Yeah.
many auto component companies which, are a representative of that particular sector. Just to give you an example,
Yeah.
Gabriel India is a large play on the two-wheeler sector. Jamna Auto is a large play on the commercial vehicle sector. We have got Bharat Forge, which has got a large exposure on the CV sector, plus exports, also are a big significant part. So I think these are just examples, but I think one should definitely pick and choose such companies which have got a large exposure on some sectors and key customers. I think
Yeah.
definitely if the automotive sector does well, these companies should do better.
Right. One more thing I wanted to discuss with you, Avinash, and that's on the IT space. It's perhaps a sharp decline that we are witnessing here. $500 million guidance cut in the US. What does it really mean? Is the IT sector still not out of the woods? Is the second half of calendar year still going to be a trying time for the space, and one should stay away?
Yeah, I think within the IT pack, my guess is the larger companies, are definitely going to find a pretty challenging
Hmm.
kind of environment, at least for the next
Yeah.
couple of quarters. But I think one should also remember, Sakshi, that these companies are available at very attractive valuations. They enjoy a very low asset light model, and they are having a lot of cash, on their books. So I think a contra investor should actually be positive on these sectors when the going is
Okay.
tough. I would not be surprised that these kind of falls which you see on a day-to-day basis may really not actually impact any of these companies financially. So I think I would be a buyer in IT companies provided your outlook is there for the next 12 to 15 months. Definitely, I think once the bounce comes in, you're going to see a lot of traction in these companies because they have been very good in terms of dividend payouts, in terms of buyouts, plus their cash flows are very impressive. So I think it's only a matter of time before we could see a revival. So net, I think you should not worry in the short term. Look, take a long-term view here.
All right. Shell, any particular themes that you're getting bullish on? I mean, we've been looking at how, most of the analyst community is very bullish on the defense space, capital goods also, like Avinash also pointed out. We've been seeing manufacturing as a key theme emerging as well. Your own sense of, have you spotted any themes that may now be the outperforming ones going forward?
So, Sakshi, let me just add to what Avinash has said on IT.
Yeah.
For people like me or my ilk, we are very happy when stocks are at multi-year lows.
Okay.
and this provides us with an opportunity on the blue chip side to make super normal money,
Hmm.
even on blue chips. So
Okay.
be rest assured, over the next 1 year, 12 months, or in fact less, you will see better rates on stocks like Infosys and TCS.
Huh.
Uh, that's because uh, deep pocketed investors who play for 6 months, 1 year, 2 year find these rates, these valuations very very attractive for both TCS and Infosys. And in the longer term, if you watch these stocks, below 30%, 35% from their all-time high, they
Huh.
always come back for two reasons. One, the management quality is superb. Indian IT has a very, very strong reputation globally. And if any company in the Fortune 500 is looking to cut costs because of the recession that is impeding Western Europe and America, I would believe the first port of fault would be Indian IT companies to reduce costs.
All
So,
right. Hmm.
so for people like long-term players, this is the greatest opportunity possible to buy a sector which is trading at very, very juicy valuations compared to the market, which is at a record high. So the
All
swing
right.
is in favor
Yeah.
of IT.
Okay, so both my guests bullish on the IT space, contra bets coming in. So that's perhaps an indication for all our viewers to perhaps now start looking at this space and look at some opportunities to nibble into some of those quality blue chip fundamental companies, fundamentally good companies that have been giving returns over the long term as well. But one more thing, Shail, I wanted to understand, this is a news point we've got today, and that is that NSE is now going to be shifting the Nifty Bank FNO expiry to Friday from Thursday. What does it really mean for all the traders community? We saw that happening for the BSE also
Yes.
earlier. How will BSE now respond? What will it mean?
So, Sakshi, for traders, this is a golden opportunity again. As you know, about 10 days ago, the Bombay Stock Exchange launched its weekly Sensex futures and options, which expire on Friday.
Hmm.
So the NSE followed suit, and it came up by shifting by a day the Bank Nifty expiry from Thursday to Friday, both on a weekly and a monthly manner. It basically means that instead of battling with two indices and two expiries on Thursday on the
Hmm.
National Stock Exchange, traders will have this opportunity to share their load between Friday and Thursday for Bank Nifty and Nifty respectively. Now, if you look at the weekly calendar, on Tuesday on the National Stock Exchange, you see the weekly expiry of Fin Nifty. Wednesday is Nifty Mid Cap, and
Hmm.
then Thursday, of course, Nifty, and Friday it will be Bank Nifty. So Monday is left. Uh,
Okay.
please be absolutely ready and tighten your seatbelts, Sakshi. You will see very high volumes coming on the National Stock Exchange platform very soon. And
Okay.
you not only have weekly and monthly index options, which you are there, but you will also have weekly stock futures and options expiries coming in the not too recent future. So
Okay.
uh, the uh, the battleground has been laid and prepared for the NSC's IPO, and
Yes.
it's a good move. It will help traders reduce their workload on Thursday, make Friday a little more attractive,
Yeah.
and they'll sharpen their trading apparatuses. I see Avinash sort of rubbing his hands with glee because we have more work on Friday. But
Right.
that's how life is, and we are in this very very exciting phase of Indian equities.
Yeah.
For people like you, Sakshi, who have many many decades ahead, there is one advice: be invested. Don't get out of the Indian market. This is probably the biggest and the best rally that we will see in our entire lifetimes, and it's going to continue for a while.
Okay, that's perhaps the best note on which we can end this show. The best is yet to come, and the biggest rally here for us to witness in our lifetimes. Stay invested. That's the guideline coming in. Thank you so much, Shell. Pleasure having you with us. Thank you so much for debuting on our show. And here's to having many more discussions with you. Avinash, always a pleasure having you with us on Business Today TV. Many thanks to both of you for sharing all these wonderful insights with all our viewers, as always. Thank you. Let's look at how the markets are shutting shop before we shut the show. 204 points of a decline right now for the Sensex, 62,584, and the Nifty hovering at 18,542. But not to worry about these dips is what Avinash really pointed out. So stay invested, just like how Shell said as well. With that, we'll wrap up this edition, but do stay tuned on to Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on other social media platforms to catch every minute update about the markets and the business of stock markets too. Many thanks for tuning in.
Well, hello and a very warm welcome to Business Today TV. I am Chetan Murani. Today, I am joined by the Senior Executive Officer of Bharti Suzuki, Mr. Shashank Srivastava, on the monthly sales numbers. Thank you, Shashank, for joining.